Welcome to the world of advanced wealth management. Today, we begin a journey through elite financial strategies used by the top 1%. Understanding these structures is the first step toward true long-term capital preservation and growth. Strategic asset allocation is more than just diversification. It is about building a fortress around your legacy. By using sophisticated legal vehicles, we can shield your hard-earned capital from unnecessary taxes and unforeseen economic shifts worldwide. The foundation of every great fortune is a robust legal structure. We start by examining how private trusts and holding companies create layers of protection. This ensures that your family's wealth remains intact for many future generations. Privacy is the ultimate luxury in the modern financial landscape. By utilizing discrete jurisdictions and complex ownership tiers, we minimize public exposure. This strategy keeps your financial business private while maintaining full control over your global assets. Look at this serene landscape. It represents the calm of true financial security. Just as nature follows timeless cycles, wealth must be managed with a view toward the distant horizon, far beyond the noise of daily market fluctuations. Tax efficiency is not about evasion. It is about intelligent optimization of current laws. By aligning your investments with favorable tax codes, you can significantly accelerate the compounding effect, turning steady growth into a massive financial engine. The Grantor Retained Annuity Trust, or GRAT, is a powerful tool for transferring appreciation. By freezing the value of an asset today, you can pass all future growth to your heirs entirely free of any gift taxes. Succession planning requires more than just a will. It demands a comprehensive vision for the future. We must prepare the next generation to handle the responsibilities of wealth, ensuring the family legacy continues to thrive and expand. Risk management is the silent guardian of your portfolio. We identify potential threats before they manifest, using insurance and hedging strategies to mitigate downside. This proactive approach ensures that your primary capital remains safe during volatile times. Observe the quiet power of this location. It serves as a reminder that the strongest structures are those built to withstand the test of time. Like these stone monuments, your financial plan should be solid and truly enduring. The intentionally defective Grantor Trust is a sophisticated loophole for estate planning. It allows you to remove assets from your taxable estate while continuing to pay the income taxes personally, essentially making an additional tax-free gift. Family limited partnerships provide both control and significant valuation discounts. By gifting minority interests, you reduce the taxable value of your estate while maintaining total management authority over the underlying assets and the family's broader strategy. Charitable lead annuity trusts allow you to support your favorite causes while reducing your tax burden. After a set period of giving, the remaining assets return to your family, often with little to no remaining transfer tax. Life insurance is often misunderstood as a simple death benefit. In elite planning, high cash value policies serve as private banks, providing liquidity and tax-free growth. This creates a versatile asset that performs well in almost any economic environment. In this historic setting, we see the value of tradition and permanence. Wealth preservation is a marathon, not a sprint. It requires patience, discipline, and a deep respect for the long-term strategies that have worked for centuries. The step-up in basis is perhaps the greatest gift in the current tax code. By holding appreciated assets until death, your heirs receive them at current market value, effectively erasing decades of capital gains taxes with a single stroke. International diversification spreads your jurisdictional risk across the globe. By holding assets in multiple countries, you protect yourself against local political instability or unfavorable changes in domestic law, ensuring your global footprint remains stable and secure. Direct indexing offers a level of tax loss harvesting that traditional funds cannot match. By owning individual stocks, you can sell losers to offset gains while keeping your overall market exposure. This strategy maximizes your after-tax investment returns. Asset protection is about creating barriers between your wealth and potential creditors. Through offshore trusts and specific legal entities, we make it difficult for outside parties to reach your core capital, providing peace of mind in litigious times. The rhythm of the harbor reflects the ebb and flow of global trade. Success comes to those who understand these cycles and position themselves to benefit from the movement of goods and capital across the vast international markets. Qualified small business stock, or Section 1202, can offer up to $10 million in tax-free gains. For founders and early investors, this is a massive incentive that rewards long-term commitment to building innovative and successful companies. The 1031 exchange is the cornerstone of real estate wealth. It allows investors to defer capital gains indefinitely by rolling proceeds into new properties. This cycle of tax-deferred growth can turn a single building into a massive empire. Private placement life insurance offers a tax-free wrapper for alternative investments. By holding hedge funds or private equity within this structure, you eliminate annual tax drag, allowing your most aggressive investments to compound at a much higher rate. Dynasty trusts are designed to last for many centuries, bypassing the generation-skipping transfer tax. This creates a permanent reservoir of wealth that supports your descendants indefinitely, untouched by the usual cycle of estate taxes every 30 years. As the fog rolls in over the city, we remember that clarity is essential for success. Even when the future seems uncertain, a well-defined strategy provides the lighthouse needed to navigate through the most difficult and complex challenges. Captive insurance companies allow large businesses to manage their own risks while creating tax-deductible premiums. This sophisticated strategy turns an expense into a profit center, building a reserve of capital that stays within the owner's corporate ecosystem. The charitable remainder unitrust provides you with an income stream for life while benefiting a charity later. You receive an immediate tax deduction and can sell highly appreciated assets inside the trust without paying any capital gains tax. Opportunity zones offer powerful incentives for investing in distressed communities. By reinvesting capital gains into these areas, you can defer taxes for years and potentially pay zero tax on any new appreciation earned within the designated zone. Pre-IPO planning is critical for maximizing the value of a liquidity event. By transferring shares into trusts before the company goes public, you lock in low valuations for gift tax purposes, saving millions in future estate tax costs. The stillness of this mountain lake mirrors the focus required for elite financial planning. When we remove the noise of the crowd, we can see the path forward clearly, making decisions based on logic, data, and timeless principles. Multi-generational family offices provide a centralized hub for managing complex affairs. By coordinating legal, tax, and investment advice under one roof, we ensure that every decision is aligned with the family's overall mission and long-term values. Derivative overlay strategies can protect a concentrated stock position without triggering a sale. Using collars or prepaid variable forwards allows you to hedge against a market drop while maintaining your long-term ownership and potential for future upside. Conservation easements provide a way to protect land and receive significant tax benefits. By permanently restricting development on a property, you contribute to environmental preservation while generating a large charitable deduction that can offset your ordinary income. Solar tax credits offer a unique way to reduce your tax liability while supporting renewable energy. These incentives allow investors to claim a direct credit against taxes owed, providing a predictable return and a positive impact on the world. Standing among these ancient trees, we gain a sense of true perspective. Wealth is not just about the numbers on a screen, it is about the legacy we leave behind and the values we pass to those follows. Real estate professional status can unlock the ability to deduct depreciation against your other income. This powerful designation transforms paper losses into real tax savings, allowing high-income earners to significantly reduce their effective tax rate through property. The Spousal Lifetime Access Trust, or SLAT, allows one spouse to gift assets while the other maintains access to the funds. This provides the best of both worlds, removing assets from the estate while keeping a financial safety net. Incomplete gift non-grantor trusts are often used to avoid state income taxes. By establishing a trust in a state with no income tax, residents of high-tax states can shield their investment gains from local authorities and keep more. Private foundations offer the ultimate control over charitable giving. You can employ family members, direct exactly how the funds are spent, and create a lasting institution that carries your name and your philanthropic mission into the distant future. The desert sunset reminds us that even the most beautiful things follow a natural order. Your financial life should also have a clear sunset plan, ensuring a smooth and peaceful transition of power and assets to the next generation. Zero-coupon municipal bonds provide tax-free growth for specific future goals. Because the interest is deferred and paid at maturity, these bonds are perfect for funding education or retirement without increasing your current annual tax liability during high-income years. The backdoor Roth IRA is a vital tool for high earners to access tax-free growth. By contributing to a traditional IRA and immediately converting it, you bypass income limits and build a permanent tax-free bucket for your retirement. Tax-advantaged oil and gas investments offer massive front-end deductions. Because of intangible drilling costs, investors can often deduct a significant portion of their investment in the first year, providing a powerful shield against high levels of ordinary income. Defined benefit plans allow business owners to stow away hundreds of thousands of dollars tax-deferred. These plans are far more powerful than standard 401ks, allowing for rapid wealth accumulation while significantly lowering the company's current taxable net income. This quiet cobblestone street tells a story of endurance. Like the stones beneath our feet, a good financial plan must be built piece by piece, with each part supporting the whole, creating a path that lasts for centuries. Freezing the estate through a preferred partnership allows you to cap the value of your business for tax purposes. You retain a steady income stream while all future growth is shifted to the common partners, usually your children. Equity swap agreements allow you to exchange the returns of one asset for another without selling. This sophisticated derivative tool helps manage concentration risk and cash flow without triggering the immediate capital gains taxes associated with a traditional sale. Qualified personal residence trusts allow you to gift your home to your children at a massive discount. By retaining the right to live in the house for a set term, you reduce the gift's taxable value significantly today. Health savings accounts are the only triple tax-advantaged vehicles available. Contributions are deductible, growth is tax-deferred, and withdrawals for medical expenses are completely tax-free, making them an essential part of a long-term, tax-efficient wealth strategy for every family. The vastness of the ocean represents the scale of global opportunity. To capture the full potential of your wealth, you must look beyond your own borders and embrace the diverse markets and industries that drive the world economy. Self-directed IRAs unlock the ability to invest in alternative assets like real estate or private companies. This gives you total control over your retirement funds, allowing you to use your expertise to generate much higher returns than traditional stocks. Asset-backed lending provides liquidity without the need to sell your portfolio. By borrowing against your securities at low interest rates, you can fund new lifestyle purchases or investments while keeping your original capital growing and working for you. The reciprocal trust doctrine is a trap for the unwary. When setting up slats for both spouses, they must be sufficiently different to avoid being unraveled by the IRS. Careful legal drafting is essential to protect these powerful structures. Net unrealized appreciation is a specialized tax strategy for company stock in a 401,000. It allows you to pay capital gains rates instead of higher ordinary income rates on the growth, potentially saving you a fortune during your retirement. The soft light of dawn over the mountains signifies a new beginning. Every day is an opportunity to refine your strategy, optimize your taxes, and take another step toward the ultimate goal of complete and total financial freedom. Cross-border tax treaties are the secret to efficient international investing. By understanding how different countries share taxing rights, you can minimize withholding taxes and avoid the double taxation that often plagues those who operate in the global market. Qualified small business stock rollovers allow you to defer taxes even if you sell your shares early. By reinvesting the proceeds into a new qualified business within 60 days, you keep your capital working and maintain your tax-free eligibility. The crummy power is what makes annual exclusion gifts to a trust possible. By giving beneficiaries a brief window to withdraw the funds, you turn a future interest into a present one, allowing for tax-free funding of large life insurance. Variable Universal Life Insurance provides an investment platform with a tax-free death benefit. You can allocate your premiums across various sub-accounts, enjoying market-like growth while maintaining the tax advantages and the long-term security inherent in a permanent life policy. As we stand at this final viewpoint, we see the big picture. Wealth management is the art of balancing growth, protection, and legacy. With the right strategies in place, your capital becomes a powerful force for good forever. The step-up in basis is a cornerstone of generational wealth. When assets are passed down after death, their cost basis resets to current market value. This effectively eliminates all capital gains taxes accumulated during the original owner's lifetime. Family governance is the structural glue of an enduring legacy. By establishing a formal family council and a written constitution, you define how decisions are made, resolving potential conflicts before they can threaten the family's unified financial mission. The Grantor Retained Unitrust, or GRUT, provides a variable income stream based on a percentage of the trust's value. This allows the grantor to benefit from market growth while still removing the underlying assets from their taxable estate permanently. International business companies, or IBCS, offer a flexible way to manage global operations. These entities provide a high degree of confidentiality and are often used to hold intellectual property or investment portfolios in tax-neutral jurisdictions across the globe. Observe the resilience of this coastline. True wealth management is about building defenses that can withstand the relentless tide of economic change. Like these cliffs, your portfolio must be prepared for the long-term impact of shifting global markets. Charitable gift annuities create a win-win scenario for donors and nonprofits. You make a gift to a charity and receive a fixed income for life. Part of that income is tax-free, and you receive an immediate charitable tax deduction. The generation-skipping transfer tax can be a major hurdle. By properly allocating your GST exemption to a long-term trust, you ensure that wealth passes to your grandchildren and beyond without being taxed at every single generational level. Preferred equity structures in family businesses allow for a clean transfer of value. The senior generation keeps a stable, income-producing interest, while the common equity and all future growth is shifted to the younger generation at a discounted value. Tax loss harvesting is a year-round discipline, not just a December task. By systematically selling securities at a loss to offset realized gains, you keep more of your money invested and compounding, rather than sending it to the government. This architectural marvel reminds us that form must follow function. Your financial structures should be designed with the end goal in mind, whether that is maximum growth, ironclad protection, or a specific legacy for your chosen charitable causes. Asset protection trusts located in specific domestic jurisdictions like Nevada or South Dakota offer powerful legal shields. These trusts allow you to be a discretionary beneficiary while protecting the assets from future creditors or potential legal judgments against you. The 1031 exchange is not limited to just one transaction. Savvy investors swap till they drop, continually deferring taxes through a lifetime of real estate upgrades, eventually providing their heirs with a full step-up in basis at death. Master limited partnerships offer unique tax benefits for energy-focused investors. Most of the cash distributions are considered a return of capital, which lowers your basis and defers taxes until the units are sold, providing high current cash flow. Private annuities allow you to sell assets to a family member in exchange for a lifetime of payments. This removes the asset from your estate while providing you with an unsecured income stream, effectively spreading out the tax liability. In this serene garden, we see the importance of careful cultivation. Wealth does not grow wild. It requires constant attention, pruning of unnecessary risks, and the planting of new ideas to ensure it remains vibrant for the future. Qualified Personal Residence Trusts, or QPRTS, are ideal for high-value family homes. By gifting the remainder interest to your children while staying in the home for a term, you remove the future appreciation from your taxable estate today. Section 83(b). Elections are critical for startup founders receiving restricted stock. By paying tax on the current value today, you ensure that all future appreciation is taxed at capital gains rates, rather than much higher ordinary income tax rates. Irrevocable life insurance trusts, or ILITs, keep death benefits out of your taxable estate. This ensures that the full amount of the policy is available to provide liquidity for estate taxes, keeping the family business or real estate intact. The virtual family office provides the benefits of a full-scale institution at a fraction of the cost. By leveraging a network of independent specialists, smaller estates can achieve the same level of tax and legal sophistication as billionaires. As the stars begin to appear over the horizon, we recognize the vastness of the financial universe. Success belongs to those who look toward the long-term patterns, moving with confidence toward a future that is carefully planned and protected. Non-qualified deferred compensation plans allow key executives to postpone receiving income until a later date. This strategy is perfect for high earners who expect to be in a lower tax bracket during retirement, allowing for tax-deferred wealth accumulation. Foreign grantor trusts can be a powerful tool for non-U.S. persons with U.S. heirs. These structures allow assets to grow outside the U.S. tax system, while eventually providing tax-free distributions to beneficiaries located within the United States. Direct private equity investing allows you to bypass the fees of traditional funds. By taking a direct stake in private companies, you have more control over the investment and can better align the exit strategy with your personal tax needs. Crummy trusts utilize the annual gift tax exclusion to build substantial wealth. By giving beneficiaries the right to withdraw contributions for a short period, you can fund a trust with over $30,000 annually without using your exemption. Standing on this bridge, we reflect on the connections that build wealth. Every partnership, every legal structure, and every strategic decision acts as a span across the river of risk, leading you safely toward your long-term financial destination. Tax-advantaged Opportunity Zone funds are the modern way to revitalize urban areas. By holding the investment for 10 years, your basis is increased to the fair market value, meaning you pay zero capital gains tax on the fund's appreciation. Splitting assets between a SLAT and an ILIT provides a comprehensive protection plan. The SLAT offers access to funds during your lifetime, while the ILIT provides the necessary liquidity at death to cover taxes without liquidating any family assets. Intentionally defective grantor trusts allow for the tax-free gift of income tax payments. Because the grantor is responsible for the trust's taxes, the trust assets can grow without the drag of tax payments, effectively increasing the gift's value. The use of family banks allows for internal lending. Instead of paying interest to a commercial bank, family members pay interest back into the trust, keeping the wealth within the family unit and encouraging responsible entrepreneurship among the heirs. The calm of the desert after a storm represents the resilience of a diversified portfolio. No matter what economic weather arrives, a structure built on diverse asset classes and strong legal foundations will remain standing when the sky clears. The 678 Trust allows a beneficiary to be treated as the owner for tax purposes. This can be strategically used to shift income to family members in lower tax brackets while still protecting the assets within a robust trust structure. Private placement variable annuities offer a tax-deferred way to invest in high-turnover strategies. By eliminating the annual tax on trades, you can use more aggressive investment styles that would otherwise be inefficient in a standard taxable brokerage account. Charitable lead unit trusts, or CLUTs, offer a variable payment to charity. If the trust assets grow faster than the payout rate, the excess growth passes to your heirs entirely tax-free at the end of the trust's specific term. Asset titling is the most basic yet overlooked part of protection. Moving assets into a revocable living trust does not provide creditor protection, but it does ensure that your estate avoids the public, costly, and time-consuming process of probate. This ancient stone path reminds us that the best routes are those that have been tested over time. Financial wisdom is not about following the latest trend. It is about applying the enduring principles that have preserved wealth for generations. Donor-advised funds are the fastest-growing tool in philanthropy. You receive an immediate tax deduction upon contribution and can then take your time deciding which charities to support, allowing the assets to grow tax-free in the meantime. The use of private trust companies offers families total control over their trustees. Rather than relying on a corporate bank, the family forms its own regulated company to act as trustee, ensuring that their specific values and goals are followed. Incomplete gift non-grantor trusts can be used to shift the state of residence for tax purposes. For those living in high-tax states, these ING trusts can shield large capital gains from state-level income taxes, saving a significant percentage. Dynasty trusts can be funded with high-growth assets to maximize their impact. By utilizing the GST exemption early, you can move assets that will eventually be worth hundreds of millions out of the tax system for many centuries to come. Looking out at this vast horizon, we see the infinite possibilities of a well-managed life. With discipline, foresight, and the right strategic partners, you can build a legacy that is as permanent and inspiring as the great natural wonders. Reverse mortgages for high-net-worth seniors can be a strategic tool for tax-free cash flow. By accessing home equity without selling, you can maintain your lifestyle and keep your investment portfolio intact, allowing your more productive assets to continue growing. Self-insurance via a captive company provides a way to turn risk into an asset. By underwriting your own business risks, you keep the profit that would normally go to a commercial insurer, creating a powerful new pool of capital. Grantor retained annuity trusts are particularly effective in low-interest rate environments. When the IRS hurdle rate is low, it is much easier for your investments to outperform that rate, allowing more wealth to pass to your heirs tax-free. Complex estate planning often involves sale to an IDGT. By selling assets to the trust in exchange for a note, you freeze the value of your estate while the trust pays off the note using the asset's own growth. In this historic library, we see that knowledge is the ultimate currency. To manage great wealth, one must never stop learning. The more you understand the hidden levers of the financial system, the better you can protect your future. Section 1035 exchanges allow you to swap insurance or annuity contracts without triggering taxes. This is essential for upgrading to modern policies with lower fees or better features, while preserving the tax-deferred status of your original investment gains. The Spousal Lifetime Access Trust provides a crucial backdoor for access to gifted funds. If the family needs liquidity, the beneficiary spouse can receive distributions, ensuring that your estate planning doesn't leave you asset-rich but cash-poor. Offshore asset protection trusts in jurisdictions like the Cook Islands provide the highest level of legal defense. These jurisdictions do not recognize foreign judgments, forcing creditors to relitigate their claims in a very difficult and expensive local court system. Structuring a family office as a separate C Corp can allow for the deduction of management expenses. While individuals often cannot deduct these costs, a properly structured corporation can, turning high-end advice into a fully deductible business expense for the family. The rising sun marks the beginning of a legacy that will last for generations. By putting these strategies into action today, you are creating a dawn of financial security that will shine on your family for many years to come. The use of equity collars allows you to protect a concentrated stock position from a significant market decline. By buying a put and selling a call, you create a price floor, ensuring your wealth remains stable even if markets turn volatile. Private foundation rules require a 5% annual payout. While this requires consistent giving, it also provides a structured way to involve your children in philanthropy, teaching them the responsibility and the joy of managing a significant family mission. The vertical slice rule in estate planning ensures that you transfer a proportionate share of all rights in an asset. This is critical when gifting interests in private companies to ensure the IRS respects the valuation and the gift's validity. Qualified opportunity funds allow for the reinvestment of capital gains from any source, including stocks or businesses. This versatility makes them a powerful tool for any investor looking to defer their current taxes while participating in long-term urban growth. As the city lights begin to twinkle, we are reminded that every great achievement starts with a single light. Your financial legacy is the sum of many small, correct decisions made consistently over a lifetime of disciplined and strategic planning. Asset-backed lines of credit provide immediate liquidity without disrupting your long-term investment strategy. Whether you need cash for a new acquisition or an unexpected expense, these low-cost loans use your existing portfolio as collateral, keeping your growth on track. Direct indexing provides the ultimate level of tax customization. You can choose to exclude specific industries or companies while still tracking a broad index, all while generating significant tax loss harvesting benefits that a standard exchange-traded fund simply cannot offer. The 60-day rule for IRA rollovers is a one-time liquidity tool. While not ideal for long-term use, it allows you to access your retirement funds for a short period without penalty, provided the full amount is returned within the window. The use of tiered LLCs provides both liability protection and anonymity. By having one LLC own another, you create multiple layers of defense, making it much harder for anyone to trace your personal ownership or reach your core assets. The mountain peaks at sunset symbolize the pinnacle of financial success. Achieving this level of security requires a steady climb and the right equipment. With these elite strategies, you have everything you need to reach the top and stay there. Strategic debt is a powerful lever for wealth expansion. By borrowing against appreciating assets at low rates, you generate liquidity for new opportunities without selling. This keeps your capital compounding and avoids triggering unnecessary capital gains taxes today. The private annuity trust is an advanced exit strategy for business owners. By selling your company to the trust for a lifetime income, you defer immediate taxes and remove the full value of the business from your estate. Fractional ownership in private aircraft or fine art allows you to enjoy luxury while maintaining liquid capital. This approach balances lifestyle desires with fiscal responsibility, ensuring that your core investments continue to work for your family's future. Qualified longevity annuity contracts help protect against outliving your wealth. By moving a portion of your retirement funds into these specific contracts, you ensure a stable income starts later in life, providing a permanent hedge against market volatility. Beneath this glowing lantern, we find the intersection of history and modern wealth. Just as these stones have supported travelers for centuries, your estate plan should be a durable path that guides your heirs toward continued success and stability. The use of non-grantor trusts can provide a fresh $10 million exemption for small business stock. By splitting ownership among multiple trusts, you can effectively multiply your tax-free gains when you finally exit your company for a profit. Asset protection is not just about trusts, it is about the charging order protection of an LLC. In many jurisdictions, a creditor's only remedy is a charging order, which prevents them from seizing the actual assets inside the company. Interfamily loans at the applicable federal rate allow you to help the next generation buy a home or start a business. This keeps the interest within the family and transfers wealth without using any of your lifetime gift exemption. Environmental, social, and governance investing, or ESG, aligns your capital with your values. By choosing companies with high ethical standards, you can achieve competitive returns while contributing to a world that reflects your family's deep commitment to progress. The quiet strength of the desert reminds us that true power is often silent. Your wealth should work quietly in the background, governed by sophisticated rules that ensure it grows and protects your family even when you are not looking. Secondary market private equity purchases allow you to buy into established funds at a discount. This strategy bypasses the early J-curve, years of low returns, giving you immediate exposure to mature companies that are ready to provide liquidity. The decanting of a trust allows you to move assets from an old, restrictive trust into a new one with better terms. This is essential for updating your plan as laws change or as family circumstances evolve over time. Section 1244 stock allows you to treat losses in a small business as ordinary losses rather than capital losses. This provides a much better tax result if a venture fails, helping to offset your high-taxed ordinary income from other sources. Structuring an investment as a loan with an equity kicker provides both security and upside. You protect your principal as a creditor while maintaining the potential for a massive profit if the company reaches its full potential and succeeds. In the heart of this ancient forest, we see that the greatest growth takes time. A legacy is built over decades of small, deliberate actions. Be patient with your strategy, and eventually it will grow into something truly magnificent. Dual residency planning can be a powerful tool for global citizens. By carefully managing your physical presence and legal ties, you can choose the most favorable tax jurisdictions, legally reducing your global tax burden while maintaining a high-quality international lifestyle. The sale and leaseback of business property can unlock capital and create tax-deductible rent expenses. This strategy provides your company with immediate liquidity for expansion while keeping you in control of the essential real estate your business needs. Trust-owned life insurance provides a tax-free pool of capital to pay estate taxes. Because the trust owns the policy, the proceeds do not count toward your taxable estate, ensuring your heirs receive every penny of the benefit tax-free. Pre-migration planning is essential for those moving to a new country. By stepping up the basis of your assets before you arrive, you avoid being taxed by your new home on gains that occurred before you even moved there. The golden hour over the harbor signifies the peak of productivity. Just as the ships return with their cargo, your long-term investments are designed to bring home a harvest of wealth that will sustain your family for many generations. Equity-indexed annuities provide a way to participate in market gains with a guaranteed floor. This no-loss strategy is perfect for the conservative portion of your portfolio, ensuring that you never lose principal during a major market crash. The crummy withdrawal right must be properly documented to withstand an audit. Sending formal notices to beneficiaries proves that the gift was of a present interest, allowing you to fully utilize your annual gift tax exclusion every year. Private placement insurance wrappers can hold almost any asset, including real estate and private debt. This turns highly taxed, clunky assets into sleek, tax-deferred instruments that grow much faster without the drag of annual income tax payments. Philanthropic travel allows you to combine your charitable missions with family experiences. By visiting the projects your foundation supports, you create lasting memories and instill a deep sense of purpose and global responsibility in the next generation of leaders. As the blue hour settles over the city, we find peace in our preparation. Knowing that your wealth is protected by the most advanced legal and financial structures allows you to enjoy the beauty of life without constant worry. The stretch IRA may be limited now, but strategic Roth conversions can still provide long-term tax-free growth for heirs. By paying the tax now at today's rates, you provide your children with a powerful, tax-free financial head start. Multi-generational housing held in a trust can provide a permanent family home that is protected from divorce or lawsuits. This creates a physical center for the family legacy, ensuring a sense of belonging for all future generations to come. The qualified dividend rate is one of the lowest in the tax code. By focusing on high-quality companies that pay steady dividends, you can generate a massive income stream that is taxed far more favorably than ordinary interest or wages. Cross-collateralization allows you to use the equity in one property to fund the purchase of another. This creates a powerful chain reaction of growth, allowing you to scale your real estate empire quickly using the strength of your existing assets. The lighthouse stands firm against the waves, much like a well-crafted trust. No matter how the economic winds blow, your family's core capital remains safe, guided by the clear light of a sophisticated and well-executed long-term financial plan. Asset protection for physicians and high-risk professionals is essential. By separating your personal wealth from your professional practice using specific trusts and entities, you ensure that a single legal claim never threatens the security of your entire family. The use of family office exchange networks allows elite families to share best practices and co-invest in exclusive deals. This collective power provides access to opportunities that are simply not available to the general public or average investors. Tax-efficient gifting of carried interest can move millions out of your estate at a low cost. By gifting the interest when the fund is young and the valuation is low, you transfer the massive future upside tax-free. Succession planning for a family business should start 10 years before the transition. This allows for a gradual transfer of knowledge and authority, ensuring that the company remains stable and profitable as the next generation takes the lead. Standing at the edge of this vast canyon, we are humbled by the scale of time. Your financial plan should be built with this same scale in mind, focusing on strategies that will endure for centuries, not just quarters. The net gift strategy requires the recipient to pay the gift tax. This is a sophisticated way to transfer large assets when the donor is low on cash, allowing the wealth to move while shifting the tax responsibility elsewhere. A preferred freeze in a partnership allows you to lock in the value of an asset while keeping a priority income stream. This is a classic tool for senior family members who want stability while passing growth to heirs. Self-directed 401ks for sole proprietors offer the highest contribution limits. If you work for yourself, this is the ultimate tool for rapid wealth accumulation, allowing you to save over $60,000 per year in a tax-deferred account. Captive insurance companies can be used to insure unique risks like supply chain disruption or reputational damage. This provides a customized safety net for your business while building a tax-efficient reserve of capital that your family controls. As the final sun sets on our journey, remember that wealth is a tool for freedom. With these strategies, you have the power to create a legacy that is as enduring and magnificent as the landscape before you today. The step up in basis is the ultimate reward for long-term holding. By retaining assets until death, the taxable gain is wiped clean for your heirs. This allows a family to grow wealth across generations without ever paying capital gains. Strategic asset location places high-tax investments in tax-deferred accounts and low-tax investments in taxable ones. This simple shift can increase your total after-tax wealth by millions over a long career, simply by minimizing the government's annual take. Qualified personal residence trusts allow you to gift a luxury home at a massive discount. By keeping the right to live there for a set term, you move the property's future appreciation out of your taxable estate today. Section 1035 exchanges allow you to modernize your life insurance without triggering taxes on the gains. This ensures your coverage remains efficient and your cash value continues to grow tax-deferred in the most competitive and modern products available. The mist over the mountains represents the complexity of global finance. A clear strategy acts as your compass, allowing you to navigate through the fog of market volatility and emerging regulations toward your ultimate long-term financial destination. Intentionally defective grantor trusts allow the grantor to pay the trust's income taxes. This is effectively a hidden, tax-free gift that allows the trust assets to compound at a much higher rate, untouched by the annual drag of taxation. The use of family-limited partnerships provides valuation discounts for estate tax purposes. By gifting non-controlling interests, you can transfer more wealth to your children while maintaining total management control over the family's core assets and business. Private placement life insurance provides a tax-free wrapper for hedge fund and private equity investments. This allows you to deploy capital into high-growth, high-tax strategies without losing a large percentage of your returns to the Internal Revenue Service. An estate freeze using a promissory note locks in the current value of your assets for tax purposes. All future growth belongs to the trust and your heirs, while you receive a steady stream of interest payments to maintain your lifestyle. The rhythm of the tides at the wharf teaches us patience. Successful wealth preservation is measured in geological time, not fiscal quarters. By observing the long-term patterns of the economy, we can harvest resources with wisdom and perfect timing. Dynasty trusts bypass the generation-skipping transfer tax for centuries. By properly allocating your exemption, you create a permanent reservoir of wealth that supports your descendants through multiple lifetimes, completely shielded from the recurring cycle of heavy estate taxes. Captive insurance companies turn business risks into family assets. By paying deductible premiums to your own insurance company, you build a protected reserve of capital that grows within your ecosystem, providing both security and a powerful new profit center. Private placement life insurance wrappers eliminate the tax drag on alternative investments. This structure allows your most aggressive portfolio segments to compound tax-free, significantly increasing your long-term returns compared to holding the same assets in a standard taxable account. Section 1202 qualified small business stock can provide up to $10 million in tax-free exit gains. For startup founders, this is the ultimate prize, rewarding years of hard work and innovation with a massive, federally tax-exempt liquidity event. The amber glow of these historic streets reminds us that true wealth is timeless. Beneath the surface of modern markets lie ancient strategies of preservation and protection. Staying grounded in these principles ensures your family's prosperity remains as enduring as stone. Charitable remainder trusts provide a life income while supporting your values. Whether you choose the fixed payments of a CRAT or the variable growth of a CRUT, you receive an immediate tax deduction and bypass capital gains on donated assets. The asset protection ladder uses multiple LLCs and trusts to contain risk. By titling assets correctly and avoiding the commingling of funds, you ensure that a single liability in one area never threatens the safety of your entire family fortune. Charitable lead trusts allow you to gift to a cause now and to your heirs later. By making annual payments to a charity, you can transfer the remaining assets to your children with little or no gift tax consequences in the future. The family office architecture coordinates tax, legal, and investment experts into a single command hub. This systemic approach ensures that every dollar is managed with maximum efficiency, preparing the next generation to lead with clarity and strong family values. Standing at this final overlook, we see that wealth is about the long horizon. By using these elite strategies, you have built a legacy that transcends quarterly reports, creating a financial monument as lasting and magnificent as the canyons themselves.